Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Jill Gragnani, head of client research and engagement at Nasdaq Dorsey Wright, to discuss broader themes in the market and where there continues to be leadership. Jay, it's great to see you as always. Welcome back to Trade Talks.
Jill, thanks for having me. Good to be here, and happy St. Patrick's Day to everybody.
Yes, and same to you. Let's start with domestic equities. Do you still see strength there?
Sure. And so, this year, obviously, we've seen coming up on now a year since the market bottomed in the latter part of March of last year. And that's the big question on, I think, a lot of investors' minds is, can the market continue to move forward and continue to make new highs? I mean, we've continued to see equity markets across the board, major equity indexes all pushing to new highs. And we continue to see the general trends of the market indices positive. And I think that that in and of itself is a very, very positive picture for the market. And so a couple of points on that is, if we look out just from a leadership perspective, U.S. equities from our dynamic asset level investing, or our DALI rankings, U.S. equities continues to be the strongest area of the market from a relative strength perspective, with international equities and commodities kind of being in the number 2 and 3 position. But nonetheless, U.S. equities remain strong. As we mentioned, equity index is pushing to new highs. And what we've really seen over the past few months is a broadening out of the market rally. I mean, last year, the market rallied predominantly on a very concentrated position in large cap equities. Large cap, and in particular growth, were really the places to be. As we got into the back part of 2020 and the continuation of that into 2021, we've really seen the market rally broaden out quite a bit, and that's a very, very healthy sign. And to put that into perspective, and what I mean by that is very simply, a lot more stocks have been participating in the rally than just the concentrated few positions up there at the top end of the market cap spectrum. But if we look today across the board at just all 500 stocks that are in the S&P 500, there's about 80% of those stocks that are in positive trends today. That is a very positive, a very healthy sign for the market, as a vast majority of stocks today are in positive trends. And to put that a little bit in perspective, typically when we look at that, and there's an indicator that we track, is the percent of stocks in a positive trend, PTSPX. But any time that we see that number above 50%, historically, that has been a very positive sign for the market. Readings above 50% simply suggest that a majority of those stocks are in positive trends. And again, historically, that has been a very strong sign for the market going forward. We're still well above 50% at 80% today. Where we would see trouble come in with respect to that is if we were to fall below 50%. We're in no danger of that here with markets at new highs. With that said, there certainly has been quite a bit of participation underneath the surface happening.
And speaking of the broadening rally, small caps and participating in that is really a big factor.
Absolutely. And part of that broadening out, you mentioned small caps, and really in that aspect of, there's been quite a bit of rotation happening underneath the surface. While the new highs on the S&P 500 are certainly masking some of the changes that we're seeing, there's been a ton of rotation happening underneath the surface, and small caps are right there at the forefront of that rotation, where for the first time in a long time, small caps are coming back into favor over large caps. I mean, you go back over the past handful of years, 5-6 years, and large cap stocks have really dominated the performance of the market. Really, large cap growth too has been the best performing style box in 4 out of the past 5 years. And this year, the best performing style box that we're seeing is small cap value. So almost complete opposite to what we've seen for the better part of the past 4 or 5 years now, with small caps coming back into favor. And so it's not just a this year performance thing, but when we look at that from a relative strength ranking perspective, if we look at all 9 traditional style boxes, the 3 small cap areas, those are the 3 areas that are ranking at the top, while the 3 large cap areas rank at the bottom. And that's something that we haven't seen in a long time. So I think it's important to mention that small caps have moved into a leadership position. It's not that large caps, and we mentioned all the large cap indexes still hitting new highs. It's not that large caps are deteriorating from an absolute perspective. We're not seeing trend violations. We're not seeing that. But what we have seen is some of those smaller and mid cap areas really move into leadership positions as they are outpacing those large cap stocks for the first time in a while.
And Jay, to wrap up here, let's talk about value versus growth.
Yeah, that's the value versus growth phenomenon is something that a lot of people have been looking at for many, many years. And it seems like at the beginning of every year, it's okay, this is values year. Okay, this is values year. And that just hasn't been the case for quite some time. However, what we have seen now is the first piece of evidence and the first real sign of evidence, definitive evidence, that value has come back into favor over growth by way of evaluating a relative strength relationship. And one of the relationships that we monitor very closely is just the relationship between two ETFs. One is an Invesco Pure Growth ETF, RPG. One is Invesco Pure Value, RPV. For the first time in over 5 years now, that relative strength relationship has reversed back up into a column of X's on a point and figure relative strength chart, reversed back up to favor value over growth. And I think that's a very important sign to watch. And that phenomenon is bleeding through into a lot of other different areas, in particular, like sector leadership. We've seen a lot of value-oriented sectors begin to perform well at the expense, in some cases, of some of the more growth-oriented sectors. But the reality is, I think that the bigger picture themes that we're seeing is U.S. equities remain strong by and large, but there's been a ton of rotation happening underneath the surface. So that's something that's going to continue to be worthwhile watching as we move forward in this market.
All right, Jay, we appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.